Let me welcome all of you to this webinar we are having today, jointly organized with the British Embassy in Madrid and with Finresp, the Financial Center for Sustainability in Spain, joined by the 5 associations of banking and financial markets and insurance in Spain. Before giving the floor to the speakers, let me, and before presenting them, let me give you some words on why was this initiative taken over and what was the origin for this common interest between the UK and Spain on the UK financial system and the Spanish financial system regarding this helping the companies and both financial and financial to transition toward a greener financial system. It all came about, well, of course, many years ago when all this worry about making finances more sustainable and aligned with the goal to a more sustainable economy. Let me go back to last December when COP25 was held in Madrid after the inability of Chile to go ahead with the plan. And this COP25 was celebrated in Madrid with a great success of participation and organization. And let me tell that at that moment it marked a very important event from the point of view of the Spanish financial system. And that was, on the one hand, the public presentation of Finresp, this center of created by the 5 largest, by the 5 Spanish associations on finance. And also a very important issue was the signing of the collective commitment by a large amount of Spanish banks, commitment on measuring and reducing the carbon footprint on their lending and equity portfolios. This was, as I said, a very important issue because it marked a compromise which from now on and for the next 2 or 3 years is going to incorporate pressure for commitment. I mean, for living up with this with this commitment. If you remember, at that time, the UK and the British Embassy in Madrid, they show up a lot of interest on how the conference was going, because the next COP, the COP26, was scheduled for this year to be held in Glasgow. And this COP26 was going to be a very, very important one because it was scheduled at that conference when the Paris goal, the goals committed at the Paris COP21 were scheduled to be reevaluated and hopefully to increase the amount of commitment toward a greener financial system. Then, as you know, this COP26 was postponed due to the emergence of COVID-19, as many other events like the Olympic Games to be held in Tokyo. As you know, most of the public events were cancelled or postponed. The Glasgow summit is postponed to November of next year, and hopefully everything will go as expected. And these goals are expected to be increased, and the degree of ambition in the fighting toward climate change is expected to be increased. Well, this coincidence or this postponement to next year due to the emergence of COVID-19 allows me to take a few seconds or 1 or 2 minutes to talk about the parallelism between COVID and sustainable finance or climate change. Some opportunistic people might think that right now the main priority is fighting against the crisis caused by COVID, and therefore we should not worry about climate change. Well, nothing more wrong than that vision. There are a lot of complementarities. There are, as a matter of fact, it is absolutely essential that we consider those 2 events from a similar perspective. First of all, both of them share a very common and very dangerous nature, and that is the exponential approach where they develop. COVID came without nobody seeing it, and when it appeared, it grew exponentially without, forcing to take absolutely bold action, which ended up into a huge crisis. Climate change, we know that it will come. And the consequences of climate change, we know that they will come. So it's not an unexpected one. But and we also know that when it comes, the effects will be devastating and will be also of an exponential nature. So we better look at both of them on a common way. But on a more pragmatic view, from the financial system point of view, let me tell you that this crisis has shown up very interesting results. That is that not only we know from more than a decade ago that green and sustainable finance pays. It pays to be green. It pays to be sustainable. Green bonds, green mortgages have shown up during the last decade a much better performance and a much better combination of risk and return than the rest of financial assets. Well, if that is true during the last decade or so, this crisis has shown us that in the worst moment of a market fall, of revaluation of assets, etc., all the assets with sustainability characteristics have shown up a resilience much higher than the rest of financial assets. The reason, well, it may be that investors concerned in this type of assets and investment are less concerned on short-term consideration. They are more patient. Their time horizon is probably longer and more stable, and therefore they are not forced by those fire sales, etc. But whatever the reasons, the empirical evidence is clear in that sense. Sustainable finance and assets having this type of sensitivity have shown up a much better resilience than the rest of financial assets. Well, going back to this common ground that I was talking at the beginning, this going from COP25 to COP26 and trying to increase the amount of ambition regarding the accomplishment of these objectives. The British Embassy in Madrid approached us, to AFI and Finresp, to try to conduct a research or a market research, trying to identify, to show up what is the universe or a big sample of providers of services to companies, both financial and non-financial, in this pathway toward a cleaner financial system. And this is what we have been working, and the results of this market research or investigation on providers of this type of services is a report that gives the ground or the basis for this webinar, and you have access to it, of course, in the web of AFI, in the web of Finresp, and so far is in English, but soon, less than 2 weeks from now, it will be available also in Spanish. There you have an exhaustive analysis of providers of services related to greening of the financial system in both countries, the UK and Spain. And taking that as a basis, we have organized this webinar on a dual session. First of all, we're going to have a first part of the session. We're going to have an overall view of the status and the situation and the challenges that the greening of the financial system and the greening of finance faces both in the UK and Spain. And for that, we have probably the most appropriate representatives from both countries. First of all, from the UK, we will have with us Catherine Bradin, which is the Director General of Financial Services of Her Majesty Treasury. And before this position, he has been working at Bank of England, the Financial Conduct Authority, and with a very, very long experience on financial services, and especially with a very special sensitivity on the green of the financial system. And then from the Spanish, to look at the Spanish view on the Spanish position, we have José María Roldán, who again is someone extremely well recognized in Spain. Currently is the chairman of the Spanish Association of Bankers and also of Finresp, this association created by the 5 association of financial markets and financial representatives. So both of them will give us this general overview, and then we will move to the second part of the session, which we will move to a selected sample of providers of services toward helping companies toward a more green financial system. And then we will have 2 of them from the UK. We will have a representative from the London Stock Exchange, from the green finance of the London Stock Exchange, who is helping companies to issue green instruments, green bonds, green instruments, and Nick Harris from the Carbon Trust. And from the Spanish side, we will have Canvas, Isabel Lopez, the founding partner of Canvas, and Forética, German Granda, the general director of Forética. So let's start with the views shown by the Treasury, by the UK Treasury, and by the Spanish Finresp, an association of Spanish banks and Financial Responsibility Center, and then we will move to the presentation by providers. So let me suggest that we start with Catherine, because first of all we have as we are organizing it from Madrid, we give the word in the first place to London. Although with this type of webinar, it doesn't matter the place where we are. So let me invite Catherine to give us her insights on how do you view from the UK the challenges and opportunities that we face. Well, you may concentrate basically on the UK if you wish, but of course we will always have in mind both of them. So Catherine, the floor is yours.
You for joining this call today. I can't actually see all of you, but it's a pleasure to be in your company. I'm only sorry that I can't actually be in Madrid with you. Circumstances mitigated against that. I'd also like to thank the British Embassy in Madrid for hosting this webinar. We're all, and of course, now becoming quite accustomed to these virtual events and to adapting to new ways of working, which is very thematically appropriate because we all also know that many of those new ways of working will have positive environmental benefits. I'm just delighted to be here with you today, to be reconnecting with friends internationally after this period of lockdown, and to be able to celebrate the launch of this report and to discuss the broader collaboration between the UK and Spain on green finance. Obviously, the UK has now left the European Union, but equally obviously, we will always have a common interest in ensuring and maintaining an enduring relationship based on our shared values. Those values include a commitment to the highest international standards, to ensuring financial stability, ensuring and fostering an inclusive and sustainable economy. And I know we share those values with our European friends and neighbours. Green finance, the theme of today, is a key area where continued cooperation is in all of our long-term interests. The UK is a jurisdiction that hosts one of the world's leading financial centres, has a particular responsibility to promote green finance, to deploy our capability to support and progress green finance, and in particular to participate in initiatives such as our recent collaboration on sustainable finance in IOSCO. As Angel described, I think there has been a debate about, the extent to which COVID-19, which has dealt this colossal shock to our economic and financial systems, risks throwing us off course in terms of addressing the climate change challenge. COVID-19 certainly has been a profound shock for all of us and for those of us in government. We in the UK have launched an unprecedented degree of support for our public services, for workers and businesses, to ensure that we can sustain our economy and employment through the crisis, to protect its emergence on the other side. And I know that in Spain, the efforts have been very similar. On business support, we've seen similar measures to those we in the UK have introduced, including loan guarantees, tax deferrals and furlough schemes. You are ahead of us in Spain in terms of your experience of the crisis, and you are emerging ahead of us out of lockdown measures. And we continue to watch your progress closely to understand what we can from your experience and to learn from that to support our own COVID-19 efforts. The financial system is going to be central to navigating our way out of the COVID crisis, but it's also central to facilitating transition away from climate crisis. It's the strong belief of the UK government that we cannot possibly lose momentum or focus on our longer term climate goals. And indeed, the Prime Minister has said in Parliament that our enthusiasm and determination to get to net zero by 2050 remains undiminished. If anything, I think the pandemic actually underscores the importance of economic resilience and a financial services sector that is truly fit for the future and fit for the risks of the future. And I think by many accounts, we've seen that finance that focuses on ESG, on environmental, social and governance issues, has fared better through this crisis than some others. So it makes sense, it makes environmental sense and commercial sense to build a more resilient economy and, as part of that, a more resilient financial services sector by making it green. And it's, the attendees on this call will know even better than I that year on year, more companies are making more commitments to net zero, to sustainability reporting best practice, which continues to advance, and that companies are putting in place real plans to deliver on their commitments. Many of you will be aware that the previous governor of our central bank, Mark Carney, is now the Prime Minister's finance advisor for COP26, and he's our UN Special Envoy for Climate Action and Finance. And he put it very directly and starkly, I think, when he said that if companies fail to adjust to a net zero world, they will fail to exist. Our focus is not just on, therefore, a green recovery out of the COVID shock, but a permanent transition to a green economy. I will just talk briefly about the history of this issue in the UK and the history of government policy. Between 1990 and 2017, the UK reduced its emissions by 42%, while the economy grew by more than 2/3. So we're reducing our carbon intensity of our economy faster than any G20 country. That was supported not least by, in 2006, some time ago now, the first global review into the economics of climate change. And that review in 2006 led to legislation in 2008, the Climate Change Act, which established a comprehensive legal framework for emissions reduction in the UK. And that's partly how we've managed to secure this emissions reduction. In June last year, we became the first major economy to legislate to end our net contribution to climate change by 2050. And we in the Treasury are now taking forward a groundbreaking review to examine how the transition to net zero can most optimally be funded, and critically to assess options for where those costs will fall. Because the transition to the future, if it is to sustain the support of citizens, has to be just, and it has to be seen to be just if it is to succeed. We're continuing to build on this. Despite those achievements, I think we have, and we recognise that we have a very long way to go. So with each economic turning point, we find opportunities to press this agenda ahead. We had a budget in March that, although very heavily dominated by COVID, nonetheless also included £1 billion support for new ultra-low emissions vehicles, additional support for tree planting and peatland restoration, which is a very big economic challenge here in the UK, as well as increased doubled funding, in fact, for energy innovation and tax measures to increase energy efficiency and reduce plastic waste, which continues to be a major financial concern and something that's very high up the public debate agenda, certainly here in the UK. As the report today highlights, though, the financial sector is central to the facilitation of this transition. In July 2019, we launched our first green finance strategy, and it had three principal aims. The first was greening finance, in other words, transforming the financial services sector to ensure that climate and environmental factors are integrated into all mainstream decision making in the financial sector. The second aim was financing green, which fairly self-evidently is directed at accelerating investment to support clean growth and environmental goals and indeed international objectives in that space. And finally, the third aim was what we describe as capturing the opportunity. So in other words, we want to capture the commercial opportunities that arise from green finance, not just in financial services, but across data analytics, low carbon technology and related innovation. At the heart of that, what we really fundamentally need is environmental actors, the corporate sector, to produce information that is genuinely informative, genuinely helpful for decision making about business and business strategy. So we're also in the green finance strategy driving forward our expectation that all listed companies and all large asset owners make disclosures in line with the recommendations of the Task Force on Climate-Related Financial Disclosures, the TCFD, and that they do that by 2022. Disclosure of good quality and consistent information is clearly absolutely central to financial markets that operate fundamentally on the basis of information, knowledge and judgment. So it's essential that that information is available so that risk can be properly and appropriately priced, and that therefore we've got the most efficient possible capital allocation to support our climate goals. And we need people in the financial sector, that's you on this call today, to be able to make those decisions with that information. So the government has helped to launch a green finance education charter that ensures that financial services qualifications and certificates include developing practitioners' knowledge and understanding of green finance. This is obviously all really ambitious and involves a lot of work and a lot of commitment. And in some ways, in terms of work and time spent, that does not directly immediately go to the bottom line. But I think the report today makes clear that these opportunities are really significant. The potential global market size for low carbon financial services could be 280 billion sterling per year within the decade and 460 billion per year by 2050. And we're really determined that we do everything we can with the right information and the right people to capture that opportunity for the UK financial services sector. And I think more broadly, we need to think about this as a shared European endeavour, and that Europe becomes a kind of a geography where these skills and this expertise is concentrated. So I think in many ways it's over to you, the participants on this call today, the representatives of the commercial sector, because this is about you considering your new products, how you can drive the decarbonisation quicker, how you seize the opportunities in new markets that are driven by both innovation and by collaboration. It was terrific to see that at COP25, more than 20 of Spain's leading banks signed a commitment to align themselves with the Paris Agreements and the United Nations Sustainable Development Goals. And Jose, I know, is head of the Spanish Banking Association. You presided over this transformation, and I want to thank you, Jose, for your personal leadership and thank each of those firms that made that really important commitment. It's now over to us to pick up that baton, as Angel indicated. It's for us to host and lead on COP26. We were really sad that we had to postpone it from November until next year. But we are continuing to drive really hard to deliver a high ambition event. And particularly we in the Treasury and in the finance sector in the UK are focusing on finance at COP26 with a really simple objective, at least simple to express, which is to ensure that every professional financial decision takes account of climate change. Global financial flows are disproportionately centred, as we all know, in a handful of financial centres like the UK and like Spain. And so our responsibility is larger to see that change delivered. We in the UK and you in Spain are already stepping up to deliver that. Our governments and regulators certainly welcome the news that IOSCO, based with you in Madrid, have launched a new task force on sustainable finance. And that international cooperation is clearly central, because without common standards and definitions, we will get fragmentation, we'll get greenwashing, we'll get cynicism, and we'll get inefficiency in pricing and allocation. I'm so pleased to see that our regulators in the UK and Spain are jointly chairing the work stream on issuer disclosure that looks at harmonisation and consolidation of reporting frameworks. And I hope that the report that is being launched today offers inspiration on the opportunities for our markets and for our firms to identify areas in which we can do more together. So as we build towards COP26, please do work with us to support this transition, be ambitious, commit your time, commit your intellectual energy. It's the right thing for business, it's the right thing for investment, it's the right thing to address the challenge that is clearly the critical challenge for our generation. Thank you very much, and I will now hand back to Angel.
Thank you very much, Catherine. Thank you. Very, very interesting presentation, especially very encouraging this support for people to asking people to be ambitious, of course, you should be ambitious. And now let's hand the word to Maria Roldán.
Thank you very much. It's a pleasure to be here talking about this, extremely important subject with all of you. Maybe, as I start, let me explain what I plan to say. I'm going to divide my talk in three parts. Why still we need this, and I will share with you some doubts that I had. Second block would be the challenges, and the third one is a little bit finishing with a word of hope. Why I think that what looks like a very complicated moment may also be a sweet spot to try to move forward. On the why is still, of course, is why still after the pandemic. We did at the Spanish Banking Association and generally speaking in the Spanish financial sector, we did an enormous effort with COP25 to move, forward. I think that, the agreement that we signed among the banks or Finresp, it would have taken us, I think that years to come up with an agreement. We managed to do it, in weeks. It was incredibly, satisfactory to see that all the effort that we were putting there was productive. That banks didn't have any doubt on the future going forward, and that we also had no doubts that we needed to accelerate the preparations as we did. So it was really a quantum leap in terms of our position vis-a-vis this ESG agenda, but in particular climate change fight. And of course, then we had COVID. It took us totally by surprise. It was like a meteorite falling from the sky, and there were moments in which I found myself first very disappointed because this effort that we undertook during COP25 was going to be lost. And second, it looked like a luxury to talk about these things where we have this pandemic crisis, you know, going on at full speed in our cities and in our hospitals. Those doubts, I had them. And let me explain you why they are totally gone. The first element I would mention is the origin of COVID. COVID, it's not just, you know, an accident that happened by you know, chance. It has to do with the things we are trying to sort out with the fight against climate change. It has to do with the pressure that the human being is putting on nature. So in fact, COVID is just, you know, an extreme form of physical risk related to climate change. It's not the type of physical risk that we were trying to identify, but it's you know, also pertains to the same family. So if you were, you know, convinced about these issues before the pandemic, after the pandemic, you need to be even more convinced about the whole thing. The second element of a more practical nature is that, well, this has shaken our economies to an incredible extent. When you compare this crisis to the crisis that we have seen in the past, in terms of the speed, in terms of the global nature, of the simultaneous nature, there's nothing like this that we have seen in our lifetimes. Of course, after this crisis, we need to put the economy under, you know, safe track for recovery. We will need to change. And if I have to invest in the future with sacrifices, I'd rather invest in a future that makes sense going forward. So the fact that we are facing these economic challenges, that we will have to change the way we work, we produce. Well, I'd rather invest in the future than invest, you know, in something that is, you know, 20th century economy. I'd rather invest in the 21st century economy. So now that we need to move ahead, it's better to focus on a growth model that makes sense, you know, for the future. The third element why I think this is relevant is the crisis itself. You know, there are very little upsides of this crisis, but at least I can find one. You know, the gap between what we were, between where we were before this crisis and what we needed to do in order to adapt our economies to this, you know, sustainable world was huge. To some extent, the crisis has made this gap, you know, this gap has become smaller. The distance between what we need to do and where we are after the crisis is going to be smaller, and the leap we need to do is going to be, by definition, shorter. So the crisis also offers an opportunity in terms of, you know, things that needed to be adjusted. Catherine was mentioning, you know, these webinars are becoming, you know, business as usual. Well, I think that it has also advantages in terms of the impact in terms of climate change. Taking an airplane, going here, going there. We spend our lives, you know, taking airplanes where we have just discovered that, okay, I mean, this may not be 100%, you know, replaceable by online meetings. But at the same time, we know that many things that we were doing, you know, could be replaced in a more, let's say, rational way. Also from a sustainability point of view. The fourth element why I think that you know, this still matters and even matters more is that what this pandemic is doing is more accelerating trends that existed than, you know, creating new challenges. It has accelerated the need for these green deals that we are all talking about, for this acceleration of changes, adaptation of our growth model. But at the same time, you know, digital transformation is there. We can see this in the financial sector. You know, the adoption of digital, you know, as a way and means to communicate with your clients has become, you know, absolutely dominant after COVID. And my thought is that this will not go away. the way we are interacting today, it's another demonstration of this acceleration. We can talk about telework. Telework has also, advantage in terms of making cities, more sustainable and facilitating, lives, even if telework is not going to be 100%, even if it is only, a limited amount of our times. The fact that you can do it, and we are learning to do it in a very efficient way, it's another demonstration that this type of trends that it's been accelerated by the pandemic, they are not all negative. They have an upside, some of them, and what we need to do is to use them. And in particular, in the fight against climate change, I can see those upsides. So, these were my doubts. Understandable in the middle of the mess, but I'm coming out of this thinking that if this was high on our agenda, this will be even higher going forward. Second block is a little bit the challenges I see, also pretty much related to the pandemic, not all of them. The first challenge I would mention is uncertainty. Uncertainty was always the big problem of this transition. We don't know, what the impact is. We don't know the speed at which the impact is going to manifest itself. We are talking about physical risk, but also about transition risk. Uncertainty has always been, what made this area so difficult to tackle from a public sector point of view or a private sector point of view. Well, I mean, here, I'm afraid that COVID has brought us, bad news in the sense that really COVID, what has done is it has increased uncertainty in an extreme way, I would say. So if we have uncertainty before COVID, after COVID, uncertainty has been multiplied, not just or not in particular related to climate change, but generally speaking, in terms of economic planning, in financial planning, uncertainty has increased. So this is the situation, we cannot ignore it. And what we need is on the side of governments. Governments, the state is the only one that can reduce this type of uncertainty. So on the side of governments, what we need is clear politics, clear policies, and a predictable and stable path towards this, sustainable economy. To sum up, we need a path, and a clearer path than in the past. So if the challenge was for government before to offer us, a route, now the role of governments, showing that route going forward, it's even higher. I think that at the level of Europe, we have the taxonomies. That's an important element in terms of the things that we need to be well defined and in place if we want to make progress. So the first challenge, uncertainty. Governments need to understand, that if this was a big issue before, this is going to be bigger even more than before after COVID, and there they can play a role. Second element of challenges I would mention is trade. My fear here is, let me call it like that, is the emergence of green trade wars. Probably going forward, carbon import duties are unavoidable. I think that Adair Turner has, explicitly asked for that type of measure. I don't think that in Europe, the EU or UK after Brexit, this is going to be an issue. In that respect, we have many challenges in our future relationship. This is not going to be one of us because we are extremely well aligned. But thinking about the wider world, I think that it's very important that we try to avoid on a world that is becoming more complex, where globalization is being challenged, where trade wars are emerging, and we can see them, bilateral trade wars and extension of them. We need to avoid that we have another layer of trade wars based on finance. On green issues, on differences in terms of ambition for us. We need to recognize as a world that probably not all of us will go at the same speed. Europe will go ahead. UK and the European Union will go ahead at the same speed. and other jurisdictions will not. And we will need to adjust. And probably these carbon import duties are going to become unavoidable. But we need to put a lot of attention to this so that this is not another element of stress in globalization. Let me now go to the final part, to the more optimistic part. After these green trade wars that I'm mentioning, I want to finish with a higher note, not with a pessimistic note. And sorry, these intelligent buildings, the shades are going down, and I need to stop them because they are noisy. Sorry. The problems of webinars. I was telling you a word of hope. The process is extremely complicated, almost by definition. I was looking at the material of the Climate Financial Risk Forum. I'm an expert on financial issues. I have been all my life working on this. I would lie to you if I tell you that reading the report, I understood 100% of it. It was more like reading through it, the summary part, of course, and it was saying, oh my God, this is really, I mean, very complicated, very complex. The process is going to be complicated for financial firms. It's scenario analysis, disclosure. This is not going to be easy. But at the same time, we don't need to complicate it further. First source of strength. Look for voters. Look what is happening in Europe with green issues. Look what the European Commission plan for recovery after the pandemic looks like. Look at elections in our countries. Look at the predominance of this subject. So voters are with us. That's the first element. Second element of strength, look for citizens' well-being. I think that it's very easy to explain people that what we are suffering is the result of the way we have been living through the 20th century. By looking at at this climate change fight, we're also looking after citizens' well-being in the medium term, even in the short term. The third element I would mention is that we need to look for quick wins. There are many labor-intensive activities that can help the recovery and that make a lot of sense in terms of fight against climate change. Increasing efficiency standards of our buildings. This is a plain vanilla issue. Angel knows very well that I'm obsessed with this. In Spain, we have a home ownership ratio that is very, very high, 84%. We have a housing situation that is dominated by relatively old houses built, in times where Spain was not such a rich country. So 1960s, 1970s, 1950s. We can, develop a plan whereby, this type of labor-intensive, work of making our buildings cleaner would pay itself out in terms of greater efficiency, means lower consumption of energy. It will help the economy because these are labor-intensive activities, and it will improve, the situation of our housing park, to put it like that. And it's not complicated. Does not require a lot of thinking behind it. So we need to look for these quick wins. Things are going to be complicated, but also we can find these areas that can help the recovery in the short term, can help labor creation, and can have an impact that is going to be very meaningful going forward. The fourth element I would mention is the need for public-private partnerships. I think that the government push that we are seeing, government thinking about the Spanish government, but also, the government in Brussels, is going to be extremely important in getting out of this crisis. We are seeing that the public-private partnership to get out of the COVID crisis is, in fact, one of the fundamental pillars of recovery going forward. On this area, there's fight against climate change. This public-private partnership is fundamental also to be able to go ahead. Of course, the financial sector will be a very important part of it. But today we are going to see that the ecosystem is wider, and that you need many more actors than just the government or the financial firms to make this happen. So let me finalize here by repeating this idea that you know, even though if you have had doubts at the beginning of the crisis, of the pandemic crisis, about this whole thing of climate change, if it made sense before the crisis, after the crisis, it makes even more sense. In fact, it has to be one of the pillars of the recovery, one of the pillars of the reconstruction of our economies going forward. Thank you very much. Catherine, it has been a pleasure to see you, even in these, you know, e-ways.
Absolutely. We miss you.
Absolutely, absolutely. We all miss direct contact is also good.
Thank you very much, Jose Maria. Okay, so before we move to the next part, let me, since Catherine has to leave in 10 or 15 minutes, and therefore she will not be able to attend until the end. Let me profit from my position here and ask Catherine a question before she leaves. A question that was indirectly, well, not indirectly, quite directly raised by Jose Maria. Jose Maria talked about, when he talked about, as I said before, this complementary, I mean, getting out of the crisis while being more sustainable, more energy efficient, and so on. We talk about this housing efficiency. I wanted to ask Catherine, whether is it in the agenda of regulators, from the Treasury or from the Bank of England, incorporating this issue of, for example, lowering capital requirements for loans related with some sustainability features, especially, for example, in terms of housing efficiency. The Bank of England has recognized in a recent paper that loans and mortgage to houses with energy efficient features display a lower NPL. So it's in the agenda. What do you think from the Treasury or from your former positions, our Bank of England or FCA? What is the position? I mean, can we see seeing the light in the next future?
I think it's a really good and timely question. I mean, the regulators, and I can't speak on behalf of our regulators who have, you know, a very wide range of policy interests in this area. A lot of our focus has been, as I was saying, on disclosures, simply to ensure that there is, you know, first of all, a consistent light shone on this information across the market. But I think Jose is right to raise the question about that will come up more generally, as well as in this context, about the interaction between regulatory requirements and investment in the economy. And there is I mean, some of that is very familiar lobbying positions, frankly, being dressed up in new COVID-related clothes. But there is I think it sort of renews our focus on the way in which capital treatment and other regulatory sort of factors influence the way capital is allocated in the economy. I think it's a complex question. It's one that is more complicated, I think, than is given credit by those who lobby for it. But I do think that we should expect to find all these sort of capital allocative questions being exposed simultaneously by the need to get us out of the COVID crisis and by the need to prepare for green. So I think it's going to amplify and extend that debate. That's a very long way of saying I don't know the answer. Because I think these interactions are fairly complex. Of course, it's different for us now because we're not within the European Union, and so we have, you know, it raises a different set of questions for us also about consistent alignment with international standard setting. That's something that is within our sovereign control and makes it different for us to engage with this debate. But I don't doubt that it will be a key feature of this debate in the rest of this year, let alone after that.
Thank you. So, okay, I think it's been a pleasure to have Catherine and Maria with us. And especially thank you, Catherine. I know you have a very tight agenda and you have to leave. For now, in other times, I would say you have to take a plane now to go back to London.
Yes, that's right.
Now it's different.
This
time is different.
You have to leave us. So thank you very, very much for your presentation and participation. And of course, thank you, Jose Maria. And now let's move to the second part of the panel, where we are going to have this presence of some of the providers of services helping companies to accomplish these goals related to the Paris objectives and in general to sustainable goals, not only related to climate. And we're going to have four representatives of different service providers, 2 from the UK and 2 from Spain. The 2 from the UK, as I said, in the first place we have Adrian Riemer from the London Stock Exchange, from the Green Finance area of London Stock Exchange, and then Nick Harris from the Carbon Trust. Both of them will focus, or by definition, or they focus mostly on green, on climate. And then we will have 2 representatives from Spain, Canvas and Foretica, with a broader view, and as a matter of fact, with a little more emphasis on the social, ethical, governance issues. So let's start in the first place with Adrian, talking about what is the view of London Stock Exchange in terms of helping companies toward a greener finance.
So it's really pleasant to be able to talk to you and to share some of the work that we've been doing and how we're helping our issuers to navigate the challenges of better disclosure and the market. I think I can share my screen, so I'm just going to do that and move to this. Hopefully you can see my screen now. So really, the focus of what I was going to talk about today is that where we see the work that we do supporting the transition, but a first little context, which is to say, as we know, the focus on ESG strategies in the broadest sense is accelerating. A good example of that is the assets under management that incorporate ESG as part of their strategy, and that comes into many different flavors, but we see very rapid growth in that, and that's continuing. The second side of the chart that I'm showing, the UNPRI signatories, really is just to emphasize that that growth we expect to see continuing, because the number of signatories and the assets under management that's aligned with that is accelerating too. So that will feed into a greater focus. That's not just pure play ESG strategies, and I think it's really important to highlight that while there are specific green and broader environmental and social strategies that are being developed, there's also a far greater integration of ESG considerations, climate being a key part of that, within all of the mainstream strategies of the asset owners and the asset managers that they're hired to implement those strategies. And there's also a very strong backdrop in terms of the policy and regulatory drivers. So we've heard some of those. I won't dwell too much on them, but obviously there's a big focus ahead of COP26. Different sectors have been already making commitments and looking at how they will support that drive. And the Build Back Better approach that we've talked about in terms of the response to COVID-19. TCFD, Catherine mentioned, is currently the sort of main global disclosure approach for climate-related disclosures and issues and risks and opportunities around that for our issuers and for companies more broadly. And we expect to see that focus continue. Investors themselves want to see consistent, comparable information globally. They invest on a global scale, and so they need to see that. So initiatives like TCFD are likely to grow because they provide consistent approaches, and they'll evolve over time. Taxonomies have also been mentioned, the EU taxonomy being chief among them. China is also developing its own, and Canada likewise, and other countries will follow that. There will be considerable similarity, I expect, between many of these, particularly those focused around climate, like the EU's, but also some interesting differences. And I think we need to be able to help investors and issuers distinguish where they sit within these different taxonomies. And the key, again, has been said already, so I won't go, but is an absolute need for relevant, decision-useful information for investors, and to help companies understand what they should focus their disclosure activity on, and in turn, what that should mean for the way that they implement transition strategies. So what have we been doing? We're very lucky in our position within the financial system, both in the UK and globally. It creates a responsibility and an opportunity for us to really play a key role to drive change, and because we sit between the investment community, those seeking capital, but also interact very closely with our regulators and civil societies, as well as the advisory community in the market. And so the approach we've taken is really reflective of that. It's worth briefly commenting that although I'll be focusing my attention on what we're doing within our capital markets business, we're very fortunate within the London Stock Exchange Group to have a number of other large business activities within the group, particularly in our information services division around FTSE Russell, which is a very large data and index provider, and it's been active in the ESG space for nearly 20 years now. So a lot of what we're doing is really leveraging their expertise, their understanding and day-to-day interaction with investors of what they're looking for, and the data sets that they have available to us. So the three areas of our focus really are driving best practice in disclosure, so helping our issuers understand that investors really want more information around ESG matters, but they want it to be materially relevant. They want to understand how this affects an issuer and what they are doing about that. So helping them understand that, we were one of the first exchanges to produce guidance for our issuers. We're updating that this year, and then last year we released some tools that I'll talk about in a moment. We also want to support these green growth companies. So companies old and new are entering this space, looking at the opportunities created around the transition to a low carbon economy. And they need capital to support that growth. So we're very keen to be a global hub for those types of companies. But in addition to that, we have all of our issuers across all sectors. I mean, some more materially affected by, say, climate change than others, but actually all issuers need to think about how climate change and other environmental and social issues are affecting their business, the externalities in which they operate, and to help support them in understanding that and transitioning their businesses, including raising capital to do so. So how have we implemented that? I think touching on each of those points, we sit within the financial system, we sit between investors and issuers, and a stock exchange at its heart is a mechanism for transparency and flows of information between those with capital to invest and those seeking capital. So ESG and climate disclosure is a natural extension of that provision of information. So last year, building upon the guidance we launched a disclosure score. It's not a rating. It's designed to help our issuers understand what is most material for their sector. So by sector, there are some common ESG metrics that sit across different sectors, but there are those that are more material to different sectors. Health and safety in the mining sector being far more material than it is in other sectors, important as it is in all. So we provide to our issuers a percentage score specific to their sector of what percentage of ESG metrics that investors are looking for that they're disclosing. And we also provide guidance around where they could choose to improve that by expanding the areas that they're disclosing information against. We provide that to our largest issuers, 500 of those where we have ESG data that we capture through FTSE Russell. And then we provided a self-assessment tool for all of those other issuers. And actually it's open access for the market and more broadly to look at and understand that. And what it does in particular is reference key global standards. We're keen to support standardization of data. And so we reference the global standards such as GRI, SASB and CDP in order to incentivize and encourage disclosure against those global standards. In relation to the green economy, we launched a mark which defines and helps make more visible companies that are making the majority of their revenues from environmental products and services. That's underpinned by a really robust taxonomy that's been developed by FTSE Russell with its investor clients over the last 10 years, and covers 130 micro-sectors of the economy. So the key thing here is it incorporates, of course, the pure play companies, but it is also far beyond that. It looks at agriculture, it looks at water, it looks at a range of different industrial activities that are supportive of the transition and supportive environmental agenda. So we have more than 79 issuers to date that have that market. We're launched with 74. We're in the process and we'll be launching in 2 weeks' time with a webinar that you're very welcome to attend, looking at the 2020 cohort of green economy issuers, and that number has increased again. And it sits importantly across our main market, our smaller company AIM market for faster growth companies, and our funds market. And again, there's a very even split between that as well as the age of companies and across sectors. We also launched a sustainable bond market. And again, this is to help support the transition of all companies who want to implement transition strategies and need capital to do so. So building upon our green bond segment, we launched a sustainable bond market last year, which incorporates and has separate segments for green, social and sustainability bonds, and built in some additional areas of focus. So for example, we allow issuers that make 90% of their revenues from the green economy to list their bonds on that segment, distinguished from those certified bonds, but to highlight pure play companies in that, who are raising capital. And we're working with the market now on a transition bond concept, which really will help to open up this market to companies that are implementing credible transition strategies, but moving from maybe a browner operating model to a lighter brown on the way to a greener operating model. It's been closed to the market so far, but we know that investors are very keen to support those strategies, and indeed we're working with a number of them on that. And then finally, we focus on educational resources because of the situation we find ourselves in, and actually even more so now because we've moved to virtual events, so our reach is far greater. Really looking at how we promote our guidance. We've published guides to ESG as well as green finance and accessing that with case studies, and a number of educational summits and webinars that we're carrying out. So just briefly to touch on the green economy, Mark, I won't go through this full slide, but it is for companies that make most of their revenues from the green economy, and it's in order to highlight that. And you know, 3 recent examples of funds and companies that have come to market and utilised that as part of their marketing is particularly around sort of callous and smart meters very successfully. So it really enables issuers to utilise a data-driven framework to promote the fact to investors that they are supporting the green economy. And also, we're looking at ways in which we can allow issuers to understand how, through the taxonomy that underlies us, how they fit and align with the EU taxonomies and others that are forthcoming, as well as they're making secondary market trading more visible for those companies. So adding to our turquoise platform these companies and enabling greater levels of visibility around trading. It's worth noting here that, you know, we have if you looked at these companies as if they were their own sector, they're able to raise capital very effectively at the moment. So they are the 5th largest grouping of companies, not a sector in their own right, but if you treated that group as if they were one, behind real estate. And I think that's a really important thing to note, that this is already mainstreaming, and this is already an area of strong focus for investors. And we've also seen, and this is based upon the current set of green economy issuers, strong performance, relative share price performance, and even through the crisis we've seen that continue, obviously following the market, but actually marginally less affected by it and earlier out. I've talked about our sustainable bond market, but just to give a sense of the scale of it, we have over 237, in fact more than that, listed now, that have raised over £45 billion equivalent in 17 currencies across the market. So, and of that, you know, getting on for half are international issuers. So those markets are very much open, they're growing very rapidly, and we're seeing this distinction between often where it was sort of purely a green focus, we've seen now a focus from sovereigns focusing on green bonds, but corporates increasingly focusing on sustainability bonds that mix green and social components. And we also, during this crisis, waived fees for COVID-related support bonds. So again, enabling those to be visible in their own right on our social segment, but also, you know, it enables us to put in place particular incentives or opportunities to waive fees in emergencies like this. And again, supporting secondary market liquidity through our secondary trading platform, in this case MTS. I've talked about the scores already, but I think it's important to note that that we've seen strong uptake from this. Investors are keen to get better data. Issuers want to provide that. I think what we see, and from the conversations that we're having with our issuers, they are confused by the plethora of standards and ratings agencies. They want to provide data. Many of them don't have the resources of the FTSE 100 to put into this, and so they need to focus their attention. So what we're really helping them try and understand here is what is most material, what do investors see as the key data that they need from you, and then to focus your attention on that, and then move beyond that into other areas as you see fit. And guidance has been produced looking at the plethora of financial instruments that are now available to raise capital for transition and to support green investments. So I wanted to summarize where we were today. We see a vital role for us to play in sharing information, helping educate both issuers and investors and bring those two parties together, and to create and innovate to create the instruments that are needed to support capital raising to drive the transition forward. I'm looking very much forward to hearing the rest of the speakers today. Thank you.
Thank you very much, Adrian. Thank you. Let's move now to continuing with this focus mostly on climate and in finance. Let's move to Nick Harris from the Carbon Trust.
Thank you very much indeed. And just a quick word of thanks to the Embassy for organising this, and also just to say how pleased the Carbon Trust is that we were able to contribute to this report. Right, I will now share my screen. Right, I hope everyone can see that. So the Carbon Trust, I'll give you a quick introduction as to what we do, and then I'd like to sort of leave with a parting thought, as it were, on the opportunities and the risks related to transition, and really how we can address that as the financial services community. So the Carbon Trust, we are a UK-based sustainability consultancy. We are importantly a mission-driven organisation. So we are not for dividend, limited by guarantee, and our mission is to accelerate the move to a sustainable low-carbon economy. So it's an interesting model. It is important that we survive and thrive commercially, but any work that we do, we have to consider the effect on the mission, as well as the commercial elements. The Carbon Trust is getting on for 20 years old now, originally born out of the UK government and funded as part of one of the first carbon taxes around the world. But since that time, we have become a standalone organisation, and this has allowed us to expand globally. So our 200 employees are now spread across the world, and I think it's representative of the way that particularly green finance is done, that it is very much treated on an international scale, and we try and represent that. So the areas that the Carbon Trust work in are varied. So we work both on the public and the private sector side. So we give policy advice to governments. We do a lot of work with corporates, advising them on their sustainability journey. We do large program management, so multi-country, multi-stakeholder capacity building related to sustainability. We have a green tech startup element to us, so we help with technology innovation. We assure and we certify, so we also assure environmental outcomes, be that your standard greenhouse gas reporting that corporates are required to do, but more recently a lot of work in the green bond area, providing second party opinions and impact assessment in that area. And the bit that I sit in is our green finance practice, which, although we've been doing activities related to green finance for some years, is a relatively recent area. But we felt green finance was so important that it should be its own cross-cutting element of the work that we do, which we provide to the wider corporate and government communities. Just to give you a flavour of some of the companies that we work with, here's a few names. The reason that I particularly flag this is that within our green finance team and the advice and the work that we are doing with the financial services community, that work is underpinned on a deep understanding of the issues that corporates particularly, but governments as well, are facing when they come to tackle climate change and that transition to a low carbon economy. So we are working with these corporates in areas such as setting science-based targets or net zero targets. We're working on strategy related to sustainability, understanding the footprints, understanding the footprint of their products and their services. So we like to take that understanding and bring it back into the financial services community in our work in green finance. And our green finance team represents the Carbon Trust in the sense that we equally are spread across the world so that we can hopefully effectively service those geographies and the organizations in those areas. And this is the green finance team that you see here. So the type of work that we're undertaking related to green finance is areas that you'll be familiar with and you will have heard sort of discussed in earlier presentations during the day. So, and these are broadly in an order that you may consider a logical sequence. So we work with companies, both corporate and financial, on their disclosures. On their working out what their climate risks and opportunities are. So that encompasses work like TCFD, or understanding what the value at risk is in portfolios or with specific assets and investments. An important area of our work recently, particularly, has been setting metrics and targets within financial services companies. So looking at the different divisions of banks particularly, and trying to help them to understand how are they going to need to transition, what kind of pathways will they want to be looking to so that they can service their customers but measure themselves against those. And that's often broader than just a simple emissions reduction target or exposure to carbon. So we also help to develop capacity within financial services companies. So from top to bottom, from CEOs to relationship managers, we try and help them to understand the kind of sustainability issues that their customers will be facing. And I think that's an enormously important area and one I'll touch on in sort of my final words. But we also help banks and other financial services companies to come up with the kind of products that are going to service the requirement of those companies that they work with, their clients, their consumers, in order to be able to help them to adjust to what transition is going to mean. Oh, sorry, my slides. There we go. So what I wanted to do is to just finish on some of the challenges and the opportunities for financial services, and just sort of put that in a bit of context, I guess. So the financial services community, that wide ecosystem, is there to service the real economy. It's an obvious statement, but it's one that I think is worth making, because if we are to achieve the goals of the Paris Agreement, if we're to achieve our net zero targets as countries, if we're to achieve our goals and targets as financial institutions, we need that real economy to make that transition. And we are obviously there to facilitate that. So I guess my message that I'd like to sort of put out there today is that it's incredibly important that we do all of the things we've talked about, understanding risk and opportunity, looking at our own disclosures, setting our own targets as a financial service community, but we must engage with our consumers, with our clients, our customers on sustainability. I guarantee that your corporate clients will know more about sustainability than you will. They understand their businesses, they understand some of these risks and opportunities, and it is really important that we work with them to understand how we can, as a financial services community, help them along that journey. So we need to recognize their issues, we need to support them, and we need to encourage. And this is entirely enlightened self-interest, because if we do that, we are going to mitigate risk in the companies that we work with, that we loan to, that we invest with, that we can exploit opportunities. We can see then which companies are looking to the future, and we can help to finance the thinking, the initiatives that they will want to put in place. And importantly, we can deepen and broaden the relationship that we have with our customers. I spoke to a client the other day who pointed out that even with their retail customers, the average length of tenure that they hold them is 10 years. If we look at how we are going to need to transition in the next 10 years, if we look at the kind of reports from the IPC, for example, an awful lot is going to change. Regulation is going to change. Technology is going to change. The way we travel, the way we work, the way we consume. So we must be on that journey with our clients, be that consumer, be that corporate. And so those commitments we make at the top of the organizations is really just the start of the journey. And the really important bit is how we do that with our clients and our consumers. So that was all I wanted to say, and I hope that's given you a sense of the kind of work that the Carbon Trust does. And I hope that's been a useful session. I'm very much looking forward to hearing the other talks and also to answering some questions. Thank you very much.
Thank you very much, Nick. So let us move now to representative from the Spanish group of service providers. Let's start with Canvas, with Isabel Lopez, founding partner of Canvas. Isabel, the floor is yours.
Thank you very much, Angel, for our presentation. I'm going to share the screen with all of you so we can start to talk. Here we are. First of all, I would like to thank you, Afi, of course, the British Embassy, Michelle especially, and Finresp for inviting us to participate in this wonderful research market of green providers from UK and Spain, and also to the attendees for still connected after 1 hour and a half and have the interest in what we are doing today. It's true, like Angel said, that the vision that the Spanish provider is going to serve, in my case, it's not only about the green economy or about the climate change. It's more a vision of the sustainability from the point of view, from sustainable, economical, social, and governance also. I would like to make a quick introduction about what is Canvas, which is our purpose and our service. And then I would like to share with all of you some thoughts of one of our surveys from the Radar Canvas that I think is going to be more interesting for all of you. And then we can discuss in the Q&A question and answer after our presentations. Canvas is a strategic and sustainability consulting firm. We created in 2014 in Madrid, and we, through helping other organizations integrate sustainability in their core business. And our mission is to help organizations to drive their business with a purpose. We have a track record and many clients in the industrial financial service, also on insurance, but in other industry also. But we really, really believe in a better way of doing business. Why? Because we have a clear and a strong purpose that is our guide in our company. That is to boost social leadership for a sustainable future. And this is how we work with our clients, and this is how we work inside our company. And also, we are a B Corp. B Corp is a global movement. For those who don't know, it's a movement from we are more than 3,200 companies around the world in 150 industries in 64 countries. And we have a one common goal, that is to use the business as a force for good. We understand and we have the vision that the global economy that use is not only for business, as also as a force for good. It's interesting, and I think is the most interesting from this movement, that our purpose driving, it's for benefit all the stakeholders, not only the shareholders. And we are certified by B Corp, so social with a mandatory purpose driving in our legal governance documents. It's not only our purpose a catchphrase or a claim interesting in our website or documents. It's something that is embodied in our legal governing and documents. Be certified by like a B Corp provides us highest standards of social and environmental performance, also public transparency and legal accountability. For balance, something that is really important for Canvas is to balance the profit and the purpose. And this is how we work with all our clients. Sorry, something is happening in my computer and doesn't work. Let's see. You can see the next slides. I'm afraid not. Yeah, here we are. So what we do in a very quick introduction in Canvas, we have two different business units. We have the consultancy and we have the knowledge business unit. In the consultancy, we have the Canvas model of sustainability that is inspiring the business in the Canvas business model that for sure every one of you know from Alex Walder. And we integrate in the 9 areas the essential aspect that we consider to be a company responsible and sustainable business. We start always with the business model of our clients, and we start to work with them in the definition of the purpose. We work also in the stakeholder management and the dialogue. We work a lot with them in the idea of the materiality of the company. That means what are the key issues for this company from the point of view of the business and from the point of view of the different stakeholders, and also the risk that they have with these key issues. We also help companies to create and elaborate strategies of sustainability, and also the goals relating to achieve the ESG that Adrian mentioned before, that we have a decade to try to achieve this SDG. As well, we work a lot with companies in order to metrics, their indicators and KPIs, and of course, after all of that, how they have to communicate and how to report all the sustainability performance. So as you can see here, we have a holistic approach to the sustainability, beginning from the business model of the companies and start to climb in the essential aspects that they have to do in order to be a company sustainable. Also, we have another business units that's with the knowledge business units, and it's we have a platform there that is the Radar Canvas. Let me see if this computer wants to work or not. Sorry about that. Very slow today. also that is the necessary skills in sustainability management. We focus on development, the research and advocacy for transform thinking and drive sustainability. We have many reports about that, about the other canvas, talking about sustainability, ethics, transparency, inclusion, all the works that we really need. And with the other canvas, in the second part of this short presentation, I would like to give you some food for thought in the idea that many of the things that the other colleagues are talking during the morning about the economy, about how the climate change is going to be a step forward for all economies, of course, for the financial sector. But it's true that before the pandemic and before the COVID-19 comes our life and lockdown, everything, there was a movement of people, legislation, companies that say really that the capitalism, as we will know, was a time for a reset. There was several movements from the political levels and legislative, and also companies that they demand a change of model. It's true that the liberal capitalist model has delivered peace and profit and prosperity and technological progress for the past 50 years, that's for sure. But it's true that in the last decades, in the global financial crisis, the model has come a little bit under strain. And particularly from my point of view, very focused on maximizing profits only for the shareholder value and forgot all the stakeholders. And it's true that this is time for a reset. It was a claim that the Financial Times published 6 or 7 months ago in the front page of the newspaper, talking about that some things have to change about that. Not only papers, also the legislative levels. The European Union is working in the European Green Deal, and this is framework to try to make the transition just and inclusive for all. That's something that is a roadmap that is launched at the end of 1999. Also in the United States, the Business Roundtable, that's the American most influential group of corporate leaders that propose an update about the statement of the purpose of a corporation. They signed by, I think, more than 200 CEOs focused on leading companies for the benefit for all stakeholders, customers, employees, suppliers, communities, and shareholders. So there's something that was there before the pandemic appears in our lives. And like Jose Maria said, and suddenly that COVID appeared in our life. What happened with that? It's true that maybe we can be the lockdown, but it's true that the companies are still working, and I think the only way to have really a step forward about that is the only pillar is about sustainability. And here you have some evidence about that. This is our last survey of the last report that we published at the end of May about trends in intangibles. It's a survey that is called Approaching the Future, and we elaborate together with Corporate Excellence. There is a Spanish think tank. And here we ask to leaders of communication, sustainability, ethics, and reputation also, what they consider to be the most relevant trends for the future. And it's true, you can see the graphics on the right side of the slides, that the 3 top most relevant trends are related with all the things that we are talking about today here. About the social expectation in this uncertain movement that we live right now. This is the first trend for the experts. The second is related about how we are changing from global warming to a climate emergency. And the third trend most relevant for the experts are the agenda of HDG that we have only 2 years. So I think it's really interesting these slides because reaffirms something that all the things we are talking about today. How it's important to understood that the only way to have a future is with a sustainable future. Other evidence about what we are talking about today here. You mentioned a lot of the other colleagues about sustainable investment. I'm not going to go through that. Just give you the evidence in Spain in the same survey, in the same source, Approaching the Future. When we asked if the ESG investment was rising in the last year, the 57% they say yes, this is a greater interest in how it is growing the responsible investment in Spain in the last 1 year. And it's true, it's really true that during the pandemic, the sustainable investment has continued to demonstrate its profitability and resilience during the pandemic. So I think its consolidation will be through establishing this taxonomy, for example, that tomorrow is going to be public for the European Union, and it's going to be a discussion public for all the stakeholders. So I think we are reinforced this and reinforce the measurement and comparison of sustainable investment products. I think that's the way. And the last thought that I would like to share with all of you is about the products and the service. We mentioned a lot of products and financial service, and it's true that in Spain, in the last year, the 53% of the companies have developed some sustainable products and service. The most common sustainable products that they offer have to do with the use of sustainable materials in their making, or eco products, or carbon footprint of service offer. So it's true that there are more and more sustainable products and service. I think here the point is that it's decisive that organizations drive innovation for sustainability in their business model and also the value chain, and align with needs and expectations on their competitive capacities. So this is for evidence and food for thought that I would like to share with all of you today. I think it's evidence that really the sustainability is the only way, I insist, to get out from the pandemic and get out from this economic recession. Thank you very much, all of you. I'm going to give the word to Angel, and I hope to see you again in the question and answer. Thank you, Angel.
Thank you, Isabel. Thank you very much. So let us move now to our last presentation for Ética, which will be done by Germán Granda, its General Director. Germán, whenever you want.
So thank you very much, Angel, and thank you, of course, to the UK Embassy and to, let me see if I can share my presentation. Can you see my presentation already?
Yes, we can. Perfect.
Okay. So thanks to the UK Embassy and AFI, of course, and Finresp for the kind invitation, and of course, congratulations for the excellent report we are presenting today. About Ética, we are the business-led organization here in Spain in corporate sustainability. Our mission is to integrate environmental, social, and governance aspects in strategy and, of course, the operations of companies. We are a membership organization, so we have more than 200 members from different sectors, and they're all very much involved in their sustainability roadmap. So we are helping them in terms of trying to push the agenda and respond to the trends of the markets, and of course take advantage of all the opportunities that sustainability is bringing right now. We are in Spain. We are the Spanish Business Council for Sustainable Development. We are part of the World Business Council for Sustainable Development, and of course, in our international relations, we are very much linked to Europe and also to Latin America. So, very much willing to help companies, not only if you are interested in understanding better the sustainability arena here in Spain, but also in Latin America, due to well, our efforts there during the last 20 years, where we've been involved, for example, in the strategy of the governments of Costa Rica or Panama recently, and we're very happy to collaborate with companies and governments in walking the talk. So. Of course, we've been working a lot with the UK in these 20 years. We are, especially with our sister organization, Business in the Community. We organize every year a Give and Gain Day here in Spain, the Corporate Volunteering Day, which is continuously a success, right? And we are also partnered with the Cambridge Institute for Sustainability, or with UK CIF. We've been the former chairs Forética of the Spanish Sustainability Investment Forum here. So we've been very much aware about how the development of sustainability investment, and now with all the aspects of green finance that now they are a reality. And here in Spain, I think there are lots of opportunities, not only for Spanish companies to work in the UK and other countries in this topic, but also for UK companies to invest here in Spain, because I think it's going to be a market that's going to develop very quickly. And of course, if we can help here in Forética, very happy to do it. Here you have some of our members, and let me just use 1 minute to congratulate all of them because of the big effort they are doing during this pandemic. And it's hitting very hard here in Spain, everywhere, and not only Spanish companies, but also multinationals and UK companies like the Bupa Group or Vodafone or GlaxoSmithKline, which are doing an excellent job here, trying to reduce the impact of the health crisis now, and in the next months also the employment and economic crisis. And we work of course in the three aspects. In the ESG, we have a broad view about sustainability. We are here mainly in this webinar talking about the green finance, and of course we have specific groups of companies. One's called the climate change cluster. That they are updated continuously in the trends, tools, and in their roadmaps to be zero net carbon before 2050, some of them 2030, 2040. So they share tools and opportunities there. Of course, also it's circular economy, natural capital, and all these aspects. Of course, they have also social implications in terms of the future of work, the jobs that we need to develop in the future, specifically here in Spain, the opportunities for young people. So there's also all these social aspect that we need to pay attention to it, and also all these issues have the governance impacts, and there is where we have our biggest strength, let's say. And we just published last week a report. It's available in our website. It's a piece of work, a piece of research, studying the different boards of listed companies here in Spain. Only 16%, 16% of board members are competent in sustainability issues here in Spain right now. Only 29% of companies have a sustainability commission in the board. So we need also to push the agenda about sustainability competent boards. So that's a thing we are doing, and we are developing different tools, specifically in the aspects I mentioned before, circular economy, climate change, but also from a broader sense, trying to help governance of the company, understanding all the ESG aspects. This is one of them, which is included in the report. So very happy to in the debate or later to give you more information about Forética, and thank you again for the opportunity.
Okay, thank you very much, Herman. So I think we're a little late, and we don't have much time for questions. But let me pick one that came from the audience through the chat. It came when Adrian was presenting, but I think it's valid for all of you. So let me summarize what it is, and I would like to hear all four of you. Your views. Please try to be as quick as possible, because we are absolutely out of time. The question relates to the heterogeneity of or diversity of scales of ESG scoring when applied to a same corporate issuer when it's done by who issues this ESG score. I mean, this question came from the audience, but it's not the first time that I hear it. I have read sometimes, especially some skeptical people, talks about that given the wide dispersion of ESG scores, depending on who issues them, that rests credibility to those scores, and therefore it rests potential for a wider use of them. I would like to hear all of you. Please be as concise and specific as possible, and try to convince people that regardless that dispersion, ESG scores are really a valid tool, and they will be really helpful for a widening of this universe of ESG issues. Germán, as you are right now with the micro, you can start.
No, just a quick reflection. I think we are in the infancy of the ESG scores. It's not my, it's not only the way I do the working, because it's the way the Economist or Bloomberg or the MIT are approaching this aspect. There are a lot of tools, methodologies, right? They are all very useful, but we still need to understand a little bit better. And I think that taxonomy, the European taxonomy, it's a good effort to try to help us understanding a little bit better all these different methodologies that we have in the market. So companies, at least the companies in Foretica, sometimes they have this questionnaire fatigue, right? And they are trying to do the best they can, but of course there's still room for improving all these scores. But I think we're moving in the right way and very fast. So I'm optimistic.
Thank you, Matt. Now going in the inverse order of your format. Now let's move to Isabel. What is your view on this?
Well, I think I'm agree with Fernando and you, Angel. Maybe there is a little bit dispersion about the ESG and the scores, because I think there is a dispersion about the taxonomy and how we relate it and the names that we did at everything. So I think the European Financial Union is making a great effort to try to create a new taxonomy, a specialized reinforcing financial advisors and also insurance managers. That's going to be published tomorrow, and it's going to be a discussion about that. So I think we are in the way to try to be not so dispersed and have a unique taxonomy in order that in any kind of language and sector, we can understand the same. So I think we are in the way to try to fix, because I fully agree with you that sometimes there is a kind of dispersion about the scores and about the names and about the reporting of the issues. No?
Okay, thank you. Well, Nick, what can you say to convince?
Yeah, sure. Well, I think that obviously it is a market in its infancy, and with any new market, people will look to innovate and change and do so for good commercial reasons. But I think we need the buyers of that data, the consumers of that data, to push back and say, actually, we appreciate this, but we need consistency. If you want to service us well as a customer, then you need to do this on a more consistent basis. So I think the buyers have a big role in promoting this, as well as very good schemes like the taxonomy and the TCFD. But I think the people buying it can, they have purchase power. You ought to use it.
Thank you very much. Thank you. Finally, Adrian, finally.
Yeah, I think that from my perspective, what's most important is consistency of the data that's disclosed. Because actually what ratings agencies do with it, they have very clear and transparent methodologies, and they will come up with different scores in the same way that different investment houses will come up with different buy, sell or hold ratings on stocks based upon the same consistently disclosed financial data. So I think what we need to understand is what's important in that is that financial data is disclosed coherently and consistently, and that that analysts can then interpret that and come up with perspectives on whether that is appropriate, strong, bad, indifferent, and how it compares with their peers. ESG data, I feel, is no different. So what we need is consistent frameworks for disclosure, then we need to ensure that those rating companies based on that data are doing so with transparent methodologies. And that's why, then we'll see different ways of doing that, and the market will take a view on which providers have the strongest methodologies. But just to give you one example of how that can work in practice, so for FTSE Russell, if a company doesn't disclose certain data points, for those data points they will receive a 0 score because there's no way of saying whether a company's policy is good or bad. For alternative providers, so MSCI will give you an average industry score for based upon the same thing, with different logic that says, well, we don't know it's good or bad, then we'll give you average, whereas FTSE's approach is to incentivize disclosure. And so that can lead to different scorings. Now, those methodologies are very transparent, and investors understand them. And increasingly, they use the data, and they will make their own conclusions. So I think the key thing to come back to this is the taxonomy is helpful for product. So what are the services being provided? But it doesn't get into the ESG, the conduct of companies, how they manage their businesses to look at environmental, social, and governance risk part of their business. So TCFD helps with that on the climate side, and we need to improve access to an understanding around data disclosure so that companies know they're being judged fairly.
Thank you much. Thank you, Adrian. Thank you, all of you. And I think it's time to quit, to end up. Let me thank you, all of you, for your excellent presentations. Thank you as well, Jose Maria and Catherine, who had to leave earlier. And very, very special thanks to the British Embassy, first of all, for their support on organizing this webinar, but especially for their support on that report, on that study that we did on their sponsorship of investigating or doing market research on the different scope of service providers helping companies to move toward this green of the financial system. And let me finalize, of course, with this thanks to the British Embassy, but especially with a clear message. The trend, the movement, the pushing, the ambition toward a more sustainable world is here to stay. And the COVID crisis, which we might think that it has shifted or dispersed efforts or preoccupations to some other areas, will not only not stop, but it will probably accelerate this trend, this ambition toward a more sustainable finance. Otherwise, we will have, whether we call it COVID-19 or whatever, we will have many different episodes like the one we have had. With that in mind, with that hope in mind, I thank all of you who have, not only for the panelists, but all of you who have attended this webinar, and hope to see you again and again. Push for that ambition that Catherine was asking for all of you. Thank you very much.